In this video, we're going to talk about EMAs, emotional moving averages. There are a lot of different indicators in trading, and sometimes your charts can get very cluttered, but one of my favorite simple indicators is the emotional moving average, and it's arguably the most commonly used one in technical analysis. In this example, I have the pound Aussie dollar, and I have a 50 EMA line already set up on the chart. So on TradingView and most charting software on your broker or whatever software you use, you can search your indicators. A lot of times, the emotional moving average is one of the most popular one. On TradingView, it's called moving average exponential. So this one's the 50 EMA. There are different types of moving averages. There's a simple moving average, and you can set the moving average to however many points in time you want that moving average. On a daily, a 50 EMA is going to average the last 50 days of price. On a 1 hour chart, the 50 EMA is going to average the last 50 hours of data. And it just forms a average line. The EMA is an exponential moving average, and it puts more emphasis on the most recent data. So the line looks a little different than a simple moving average. I've always used the exponential moving average. That's what I was taught and how I learned. Some people like the 20 EMA, which is again the last 20 periods of whatever time frame you're on. And some people also like to use the 200 EMA. I have kept these on my chart before, but I like to keep things simple, and the main one I use is the 50 EMA, which on my charts is the red one. The 20 EMA is this light dim blue, and the 200 EMA is this purple line. So I'm going to get rid of the 200 and the 20 and just keep it simple. What you're looking for on the chart is if the line is going up, it is generally an uptrend. If the line is going down, it is generally a downtrend. I prefer to look at the trend myself. So I like to look at the higher highs, higher lows on this to be able to tell is an uptrend. So I'm not looking for the direction of the line. Like I'm not over here looking, oh, the line's about to start going down, there's going to be a downtrend. I would rather, draw in a trend line right here, see that it formed a lower high, lower low. It's coming back to retest the trend line and the 50 EMA. I'm not necessarily looking for where the line is going. So this actually would have been a good sign of a trend change, and it obviously failed. But what I mainly look for on the 50 EMA is it acting as dynamic support and resistance. So dynamic just means a moving support and resistance, whereas a horizontal line would be static. So the EMA on this example, it is acting as fairly decent dynamic support and resistance through here. You can see it was holding price, it broke it, and now it is respecting it fairly well, trending up, broke it, retested, and now it's holding it on the downtrend. So there's going to be times where the pairs don't really respect it. You can see the pound Aussie respects it pretty well through all these regions. You know, it's just breaking it back and forth, and prices either using it as support or resistance. So I'm going to pull up, let's look at euro pound. Let's see. Okay, so you can see through this area, it's really not acting as a good support and resistance, mainly because the price is consolidating and not moving in big enough changes for the 50 EMA to really use its 50 days formula to form a different direction in the line. But you can see starting here, it starts to respect it again, and broke out, respected it, broke it, respected it, and this is really just as simple as it is just using the 50 EMA, or if you prefer a 20 or a 200 EMA, wherever they are acting as support and resistance on a chart, you're going to have to go through on whatever pair you're looking at and see if it is actually acting as dynamic support and resistance before you use it as analysis for your trade. Just because it breaks it and retests it doesn't mean it's historically been respecting it in the recent times. So you want to make sure before you use it as some analysis that it is being respected in the recent price action, like it is right here. It's holding price as resistance, and then once it broke it, you could look for it to hold it as support. So just like anything in technical analysis, there's not one factor that is going to provide an edge. You need to layer a 50 EMA with other technical analysis, trend lines, horizontal lines, price patterns. You need just multiple time frame analysis as a whole, noticing where there's a change in trend by identifying the highs and lows. That's again layered with a 50 EMA. You don't want to just use the 50 EMA to trade off of. So I hope this helps explain EMAs in a simple, quick way. If you have any questions, post them in the comments below. I'm really just trying to put some content out there that can help traders like myself, but in the earlier stages like I was, who you're trying to figure it out, and I really just want to help. So if you have any questions, post them in the comments and I will be happy to help.